We're not surprised by the, I would say, some profit taking, Sarah. OPEC has a history of non-compliance, so I think there's a reasonable amount of debt. But I think there's some validity to the cut in OPEC production. Saudi Arabia, if you remember, cut some compensation to several government officials, announced that this week. It to me is an indication that they're really suffering. They're running some budget deficits over there. So I think they have a lot of incentive to have oil prices rise. This does help the market rebalance and speed that process up. And we think, bottom line, commodity prices in the energy space have bottomed here.
Dan, one of the other big factors that's been driving U.S. equities over the last week or two has been the state of European banks and the general effect that's had on risk sentiment around the world. Are you concerned about the potential plight of the likes of Deutsche Bank for U.S. equities, or is that something that's a little too far away?
You know, I think there is a certain amount of worry about that, Wilford, but at the end of the day, we think the progress that the European banks are taking are actually a positive, and they'll get through this rough patch. I'm very confident of that. I think they're taking a number of steps to restructure, build up their capitals. We view the trend to be a positive, not a negative.
Just back to oil, if you do think this is very symbolic and will drive the price of oil higher like we saw yesterday, why aren't we seeing, for instance, the 10-year yield higher on this idea that higher oil prices will lead to higher inflation?
I think the bond market is waiting to see proof. I'm concerned about it, to be candid with you. We think this is sowing the seeds for future inflation. I think the Fed has to be very, very concerned that they may be getting behind here in terms of monetary policy. We think the Fed should raise rates in December and probably have at least 2 or 3 rate increases of Fed funds rate in 2017, so that the market doesn't appear that to be ahead of the Fed, but the Fed be ahead of the market. I think that's important. Inflation is starting to rise here in the U.S. I think we're now at the 2% level the Fed has expected. I think it's starting to creep above that rate level. So I think the Fed needs to act here rather sooner rather than later, and we expect that to happen in December.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.